the time is 9 o'clock. Good evening, good afternoon, good morning, wherever you are around this beautiful world. Welcome to another Inner Circle Live Asian session. I am your host, Benny Allen, and along with me, I always have my awesome partner, Mr. Ryan Carthage. So let's make sure, as always, we turn off any and all distractions for the next hour or so. Grab a pen and paper, take lots and lots of notes, and let's make sure that we participate and engage as always. So just a quick disclaimer, trading the Forex market is risky. Never risk money that you cannot afford to lose. I am not a CTA, which stands for Commodities Trading Advisor, meaning that everything that we cover tonight will be for educational purposes only. We can teach you the technicals, the fundamentals. We could talk about our trade setups and our strategy, but at the end of the day, you are 100% responsible for your own account. All right, so enough of that. Ladies and gentlemen, welcome. We are so happy as always that all of you are here with us this evening for another live session. So let's get things going. Before we really break into the charts and look at the technicals, I want to talk because I had a couple of people reach out and they were saying, well, hey, you know, I really like swing trading. I get their idea of trading small, but how would I play some of these setups if I wanted to play with that short stop loss? And we kind of, it came from because we kind of alluded to it last night, looking at some of the setups and different ways to enter. How can I effectively kind of get into that trade, maybe risking a little bit more, 2%, 2.5%, things of that nature, and play with a tighter stop loss and have a higher risk to reward. Okay, because we talk a lot about swinging, talk a lot about giving your trade room to breathe. We talk about how to operate with a high strike rate, but what about that high risk to reward type setup? How can we utilize these setups to get in these trades? So we're gonna do a little bit with risk management. We did it before, but it'll be good for some of the newbies and a good review for some of the people that have been with us for a while in regards to how to scale down, right? So we're talking about that 4 consecutive loss rule, like we've gone over, I think, a couple times since we started the Inner Circle, but it is important to understand how to manage your money, especially if you're saying, hey man, I would really like to use a tighter stop loss, risk a little bit more than 1% per trade, but I also don't want to blow up, okay? So if it's okay for us to start with that, everybody drop me a 2 in the chat and we can just go over a quick example of how you could possibly do that, because I know we have all different types of traders in the group. All right. So Ryan, I think you should be all good now.
Yes, sir. We're good.
All right. So anything to add real quick before we turn to this little risk management part? And
no, I'll save mine to the end.
Okay. Cool. All right. So let's talk about it. So we're going to say, hey, you want to risk, and it can work for any size account. Okay, so quick review. We're going to use a $10,000 account. Okay, so you can say, hey, I've got 10 grand. All right, I've got $10,000. Okay, that's the size of my account. And again, even if your account is smaller than this is how you can do it, right? We talk about, hold on. I got to make this a little bigger so everybody can see it. Like this. Okay. So you start with a $10,000 account. So we'll say starting capital, $10,000. All right. And we're going to say, we're going to operate with an average stop loss, let's say 25 pips. Okay. And we're going to say, all right, we want to go beyond the 1%. We're using a tighter stop loss, higher risk to reward. We're going to say our risk is going to be 2.5%. And we're going to say, let me think here, our risk to reward ratio, risk to reward is, we're going to do, say, a 1 to 3, 1 to 2, 1 to 3. Okay. So for every dollar we risk, we want to make 3. All right. For every $20 we risk, we want to make 60. All right. So this is how this all plays together, and then we'll take it to the technical charts after that. So drop me a 1 if everybody is clear on this. This is our setup for our example. Hold on. Hit the wrong button, everybody. Okay. All right. So we're good on that. So I'm gonna do something. I'll move this up. Excel. So this is what we're looking at. Okay. And we're gonna put this in here. This is the 4 consecutive loss rule. Okay. So it's good to review this because it's very, very important, because everybody worries about how to win, but nobody really strategizes on how to lose, right? When you look at airplane pilots and things like that, they train more on crash situations, right, than they do the actual flying in a normal environment. Okay, so we have to know how to lose. If we understand that losing is part of the game, we have to know how to lose. Okay, so we have $10,000. All right, and I'm gonna delete this line right here. Make sure we got the right space. So we go 10,000. All right, and we're risking 2.5%. So that means that we're going to trade with, on this $10,000 account, we're going to say we're going to start with a standard. So start with, let's say, starting lot size standard. That is $10 per pip. Okay, $10 per pip. All right. In your phone, that's a 1.0. All right. So we've got 10 grand. We have a question? Okay. So we start with $10,000 over here. And hold on. 10,000. And then we'll just go trade 1. So if we trade at a standard at $10 a pip, and our stop loss is 25 pips, right? If I lose that trade, how much money am I going to lose?
$250.
$250. That's right. All right. So trade 1, we lose the trade, $250. Okay. So we lost that trade. We lost $250. Okay, because we're risking 2.5%. Standard, easy math, right? So we lost $250 on that trade. Okay. We go to trade number 2. Okay. We lose again, right? We understand that it's all about a series of trades, not just one trade. That's why risk management is important. We take the L. 250. Lost it. Come on. All right. So now we're down $500. Okay. So we call this the 4 consecutive loss rule. So we're going to take 4 consecutive trades, right? Trade number 3. Okay. We lose another 250. All right. And we take our fourth trade and we lose 250. Okay. Number 4 minus 250. How much am I down now? Somebody tell me.
$1,000.
Down $1,000, right? We got $9,000 left. Here's the secret, if you want to call it a secret. It's really not, all right? It's just good money management. If you lose 4 consecutive trades and you're down $1,000, right? No need to have a heart attack. We've got $9,000 left, all right? On 4 trades, we lost $1,000, 25 pips, right? $10 a pip, that's $250, we get it. What you do from here? Because somebody tell me what we're gonna do for our next 4 trades.
Reduce your risk by 5. I have to.
Say that. Somebody say that again. I can't hear.
Reduce your risk by half.
That's right. You're gonna reduce it by half, right? So instead of us risking $10 a pip now, okay, we're gonna risk $5 a pip. Okay. So trade 1. Okay. Look, we lose. Okay. And this is just this scenario because we know we can win some trades in between. Right? So now we're risking $5 a pip at 25 at a 25 pip stop loss. Somebody tell me how much money am I losing now?
125.
125. We got this. See, we got this. You're losing $125 minus 125. All right, 125. Trade 2. All right, 2 minus 125. All right. Okay. Trade 3. Minus 125. Trade 4. Minus 125. Okay. How much did I lose?
500.
No, it's $500, right? Lost my next 4 trades. So now I'm down to how much? How much capital do I have left?
8,500.
8,500. There it is. All right. I've got $8,500 left. All right. How many trades have I taken, everybody?
8.
8 trades. Okay. So now I'm down to $8,500. All right. So we'll start this up here. We'll do a new box. All right. So I'm at $8,500. Okay. At $8,500 of capital left. I'm 8 trades in. I'm passionate about trading, but I'm taking some L's. All right. So we're going to our next 4 trades. Somebody tell me, what are we going to do? Are we going to keep the lot size, or what's the game plan?
I'd cut it in half again.
Yeah.
That's it, right? Awesome. Awesome. You cut it in half again. So if I was trading at $5 a pip, how much am I trading at now?
250.
250, right? So every trade I lose, right? Now I'm minus 62.50. Okay. Trade 2, right? 62.50. Trade 3 minus 62.50. Trade 4 minus 62.50. How much did I lose total? Somebody tell me.
250.
You lost $250, right? So now my balance is what?
8250.
Supposed to be 8,500. My bad up here. 8,500. Right. So now I'm at 8,250. Right. $8,250. Right. What am I gonna do with my trade? Am I gonna keep trading at 250? What am I gonna do?
I think you should stop.
I think you should stop. Right, right. Yes, go back to the drawing board. Come spend some time in the inner circle, right? Watch the video, something, do something, right? But you might want to get off the chart. But let's say we didn't, right? So now we're trading, right? How many trades deep are we? 1, 2, 3, with 12 trades deep, correct? So at this point, I'm at $1.25. Okay. So trade 1, we're just gonna work it out for the sake of the exercise. Okay. 2.5. Trade 2. Okay. You can't go below this $1.25. All right. You can't do it because it's dang near impossible to get back to where you need to get to. Okay. Because what you do is when you reduce it, you cut it in half. You need to stay at that level at least until you get back, right, to your previous amount. Okay, then you can look to scale up again. So trade 3 minus 31.25, and trade 4, okay, minus 31.25, right? So I lost $125. Okay. We can scale down, right? If you get to this level, you have to stay there. You lose 4 more trades, right? So we've got 1, 2, 3, 4. That's 16 trades in a row that we have lost. Okay. We can go one more round and make it 20, right? So if I'm at 8,250 and I lose, right, $125 on the next 4 trades, okay, that puts me at 8,125. If I do another round and I lose, that puts me at 8,000 even. That's a total of 20 trades that you've taken and only lost $2,000. Now, how many people know somebody that's been blown an account in less than 10 trades?
Me.
Yeah.
I do.
Right. We've all been there, right? And the beauty of understanding how to properly draw down is the key to winning. Because if I win one of those trades and I'm at a 3-to-1 and I get 75 pips, that's $750, right? And then you can just do the math from there, right? $500 at a 2-to-1. Okay. If we're risking 25 and we're going for a 2-to-1, that's 50 pips, right? 3-to-1, 75. Okay. It's really just basic arithmetic. All right. So if you are going to trade, right, at a higher risk percentage, 2.5%, and you're going to use these type of setups, okay, it is imperative that you know how to scale down your trades. Okay, let's just face it, you get to 20 losses in a row, you got to go back to demo, right? Something, okay, and figure it out. But the key is staying in the game. Okay, stay in the game, right? So how do we do something like this when we're looking at these type of setups? One thing that's going to happen, right, is we look at a bunch of swing trades on a regular basis, week after week after week. What you have to do is you're going to have to become, if you're going to risk 2.5%, you're going to use a tighter stop loss. You have to be super patient. You have to be strategic, and you're probably right. You're probably going to say, I don't want to trade at the B boundary, but when I get setups that make that shallow retracement and hit that 127 zone area, I will look to trade those once a low forms, and then I get some confluence, right? Drop me a 4 in the chat if everybody understands what I just said. Awesome, right? So we're not looking to take every setup at that point. We're not trading at super low lot sizes and looking to scale in and build it, right? We're being more strategic about how we go about this. Okay, so let's go to some examples. Let's set 4 up on the charts just to show you guys some things. Okay, so for example, if I'm trading, it could be any of these, right? But if I'm looking at this pound dollar and I'm looking to get in on this pound dollar move, okay? And I put multiple things on here to show you guys because it depends on the type of trade you are and what you like, right? I have a 20 on here with a 50, okay? And then I have a 200, right? So that's kind of like a inner, outer, and a long-term trend line. That's more elastic. It's more elasticity to the moving averages. Or you could just use your trend line, okay? But I'm looking at running a very tight stop here, okay? I'm looking at running very, very tight stops to get in on that trade, and then you have to play your risk management accordingly, okay? So if you took, right, off the break of an aggressive break of the 20, right here, okay? I don't know what this is, but that's like 20 pips, okay? But say that was your 25 pip range right there, okay? Now I'm in a situation where if I'm in here, right, off that low, this little bitty double bottom, and I'm long to a potential TP1, that's over 160, 70 pips right there, right? That's greater than the 3-to-1, right? So this is just an example of that style of trading. If you want to risk more, if that's what you want to do, that 2.5%, you have to keep it tight, and then you have to know how to scale down, right, your trades, right? So one easy thing to just remember, which is why I wanted to go over it, as you use the 4 consecutive loss rule. If I'm taking setups like this and I lose 4 consecutive trades in a row, right, it is a must, okay? You can't allow yourself to get emotional, right? You can't allow yourself to get all emotional. You have to scale it down. If not, you're gonna blow up. You're gonna blow up, and I'm hoping I'm crystal clear on that. Okay, you have to, if that's gonna be your rule, and you're gonna play with a higher risk percentage, you have to walk it back when it comes time. Okay, because you're gonna have your times where you lose that 4 in a row, and you have to be true to yourself and take that look in the mirror and say, you know what, my rule is I gotta walk it back, cut it in half. It's later you're gonna be disappointed. Okay, any questions?
No.
No questions? So I just want to make sure that we're crystal clear on that. Oh, you're welcome, Ken. Right? Because we know, hey, we know this. You're discovering what type of trader you are, right? Hey, man, I don't like those wide swings. I don't like the drawdown. I want to know a lot sooner than later whether the trade is going in my favor, moving in the right direction. Okay. So you're gonna have to keep it, right? And the reason why I use the 25 pip example is because if you're real strict, right? So now you really have to be strategic, right? So 2-to-1 is one thing, 3-to-1 is another thing, right? So if you have a stop loss of 25 pips and you're saying I'm 3-to-1, then you're gonna have to navigate through these charts and find those 75 pip setups, for example. So you really have to be patient. You have to be like that cheetah sitting back in the bush, waiting to pick off prey. Right? So you might only take 3 trades a week, 4 trades a week, right? Maybe maximum 5 trades a week. But you have to be patient and say, nope, that's not my setup. Nope, I got an AB boundary, but nope, it's not at my extreme low yet. My extreme low is a 127 to the downside. a 127 to the upside on a pure 80-20 play. And then I need a trend line break, or I need some moving averages to break, however you want to play it, right? That's how you have to change your mindset when you're looking at strategically trading those type of setups. So I just wanted to make sure that we go over that, because I have received some questions and some interest in that. All right. They're major moves when they hit, right? When they hit, they're major. They're major. So you might lose 2 trades and be down 500. But if this trade goes, right? If that trade goes at that standard, that's $600, right? So you're up, right? You're gonna be up. But you have to be willing to have the stomach to execute the system. And when you're taking those stop outs, you can't get all shook up and get all emotional. You just have to understand that it's part of the game. Okay. So that's it. Ryan, anything to add to that?
No, sir. That was. I hope you guys really pay attention to that process, right? Regardless of the account size, the process is still the same. Process is still the same. So if you guys got to go back and rewatch just that, if you just go back and rewatch just that part of this live multiple times until you get it, rewatch it until you get it. Rewatch it until you get it, until you really understand it. And then go and practice it in a demo account.
Absolutely. Absolutely. And be super patient for the setups, and whatever your rules are, right? For confirmation and confluence, make sure that you stick to that, right? If you're saying, hey, I need a loader form and I need a trend line break or a break of the 20, right? If my rules say I need a trend line break, right? No moving averages on the screen. I need a trend line break. I need a loader form at my extreme point in my zone, right? So if we go up and we look at the what is this, the Aussie dollar? So I'll go to the regular charts and look at it on the 1, right? We're not quite to that D extension yet, but there's a sub fit play on that, right? That hit a D extension right there. Okay, so if you were playing a U-turn off of that, right, you have to say, I needed to hit my 127. I needed to hit an extension. I needed to be in my zone. If what was that, the pound dollar was the one on the 1. If I take a look at that and I say, okay, well, it's in my zone after a shallow retracement, okay? And then you can go down to your 15 or so and say, you know what? I need to have, if you're using trend lines, I need to have a trend line break. Or if I'm using a moving average, I need to have a break of the moving average. And then I'm gonna put my stop below that low prior to the trend line break or prior to the break of the moving average, right? And you have to stick to that, right? So you're gonna take less trades, right? Because you're being more strategic in regards to what type of setups that you're looking for. You're being more exact in that sense, right? Because when you're risking 2.5%, you're not trying to give it a whole lot of room to float. All right. So then now we're in that high risk to reward type of scenario. Okay. High risk to reward type of scenario, right? So if we pick that up, we roll to our target, right? 156 pips, right? Even off the break of that trend line, right? That's about 25, 26 pips, right? It's about 25, 26 pips. Yeah, so that's right in that range, okay? So if you took a standard to that, you're risking $250 or so, $250, $260. If it hits TP, right, you're up $1,500. It's pretty awesome. I don't know what y'all think, but if you're trading at one mini lot, right? I'm risking $25, right? To gain $156. It won't take you long to get to where you want to get, if that's the style of trading that you want to do. The key is that if I risk more, I have to know how to scale back. I can't say that enough. Can't say that enough because I've taught it in years past before the inner circle, and then people don't listen to it, and then you get that I blew up my account email. So yeah, that's it. That's it. Any questions before we get tearing into the charts and taking a look at things? None? All right. So Marshall, yep, live to trade another day. Exactly. Exactly. All right. So you can put, like as I like to say, more smoke on the trade, but you got to know how to manage it.
So Benny, I lied. I'm gonna hop in real quick.
Okay.
Real quick. Big time investors will say they can give anybody the strategy that they use to become a millionaire. Some cases a billionaire. And whoever they give it to will change it and screw it up. Because we as people, we make things complex. We make things difficult. You hear Benny say all the time, this market is primitive. It moves up, down, and sideways. That's it. Right? The skills that we, me, Casey, and Benny use and that we're teaching is literally what we use every single day that's helped us be successful. So I'm saying this to say you don't have to recreate this process, right? But what you have to do, especially for the new people, what you have to do is log into that subscription side of this platform and watch the videos. Watch the videos so that you can understand. In these live sessions, you're going to see the big picture. You're going to see every single step that we do all put together. And for new folks, we got some people that might be your first time on a live session. It's going to sound like gibberish. I'm telling you, it's going to sound like gibberish. But that's okay. Because then the next step is going and watching those videos where we take each piece and break it down individually, step by step by step by step. And in watching those videos, you then get homework assignments. Go back and do the homework assignments. Put in the practice, put in the work, put in the time, the effort, the energy. In that work, in that practice is then where you'll start to develop some questions that you can then bring back to these live sessions and ask to get your answers. So you can then go back and practice some more and maybe rewatch that same video or that series of videos to get more understanding, to then go back and practice some more. And you then probably have more questions. Bring those to the live sessions. In this process that I'm describing is where the growth happens. We're not going to tell you that you're going to get rich overnight. We're not going to tell you that this is a quick thing that you'll be able to learn tomorrow. We're not going to tell you that. We will not tell you that. So I want you guys to understand it takes time, it takes effort, it takes energy, and it takes work. Okay? So I want you to guys come in with the right mindset of, look, you might not get it tomorrow, but that's okay. You're building new muscles. You're doing new exercises. It's going to be difficult. It's going to be, you're going to be sore. But in that soreness is where those muscles grow stronger. So if this sounds gibberish tonight, log in and start watching those videos. And continue watching them and continue showing up every single day for yourself so that in 3 weeks, in 4 weeks, what Danny said, a month in, things started to click. It will click if you show up and if you do the work. We can't do it for you. We want you guys to get it, and we're going to show up every single day to give you guys everything that we know, but we can't do the work for you. You got to want it for yourself. You got to want it for whatever your purpose, your mission, your cause is, whatever your why is. That has to drive you to put in the work, man. So remember that as we're going through this session tonight.
Absolutely. Absolutely. That's it. That's it. That's the whole key. Put the work in. Put the work in. You'll get to where you want to go. And that's with anything. All right. Not just trading. Awesome. Thanks, Ryan. Appreciate it. So let's take a minute, drop in the chat any pairs that you you're welcome, D. Any pairs that you want to take a look at, so we can look at the progress on those setups. GBP, JPY, PY, okay, can. So we'll get going on that one while the other ones come through. Oh, yep, GJ. USD. All right, so let's take a look at it. Let's take your USD. We'll get that one too. So let's take a look at this GJ daily level, right? And pushing down, right? So we go to our 1 hour chart and we are rolling downhill, right? So the reason why I've been going and really like simplifying it, you know, lately, and Ryan's been doing the same thing, because we don't want to make this capital fit confuse everybody, right? We use this to help us get to the reversal point and then set up some targets, right? But if we just went off structure, okay, so we can mark those out, and then if it confuses you, just take them off, right? Can anybody tell me what direction this is moving?
Down?
Ain't it? Down, right. Thank you so much. So this is moving down, right? We can see what happened, right? Just simply look. It went up, hit resistance, hit the ceiling, and then it did what? It came back down. That's without that fib on there, running from the other direction, right? That helps us find those U-turn points, those critical U-turn points. Look, this thing went up to that same level, and then it came down. Okay, so we see this, right? It went up, right? Failed to break out, back down to the bottom, went up again, and then back down. All right. So if you looked at nothing but just price action and structure, you can see exactly what this is doing. But this is why we bring the higher time frame levels down, so we know where we're getting a reaction at. Okay. So, but prior to this move to the downside, can somebody tell me what direction it was moving prior to the down move?
Sideways.
You had an uptrend.
Uptrend. Overall, what we just went over, it was moving sideways in a range. I get what you're saying there. Absolutely. But this immediate leg was moving in an uptrend. Therefore, before this price dropped, it was moving in an uptrend. It was making up ABCDs, hit a level, and then it started making down ABCDs. We use this prior fib to set up some short-term targets, right? Boom, boom, boom. And then if it wants to continue down and take out the A, it can do so, right? So if we just focus on this level here, to the downside, this is what we call that sub fib, right? We can see that it's making down ABCD waves, but we haven't quite got, right, that 382 yet. So there's always the possibility of it stalling, just like it's doing now at this 118, 127 zone, and then pushing its way back up for a deeper retracement, right? We've seen it, right? You've been with us for a while now. We see that play happen over and over and over again. Does it happen all the time? Exactly. Heck no, it doesn't. This is the market. I don't control it, right? So we just look at, hey, look at the pattern formations and the price action, right, in the area of the highest probability. And we know that when we're playing with these fibs, a lot of time it has the ability to make a U-turn for a deeper retracement. Now, we know we've been in risk off, right? We've been in a risk off scenario. We know that the pound sold off because of all the things that we've gone over the last couple of days with the pound. But still, the technicals are still the same, right? You got yen strength because of the risk off scenario. Okay, safe haven, and you got the pound. What happened with it? Okay, so the pound's been weak. You had to sell off with all the pound pairs, but this is where we are right now. Okay, so we do have a potential for that to push up. Now, if you're saying, "Hey, I'm a bear," I think that pound's going to stay weak over the next week or so, right? Then if I'm just a bear, then I don't want to sell at a low price. I want to sell at a high price. So regardless of what that bias is, you want a high price to sell it. And if you're a counter trend trader, you want to buy it up to that high price. That's just how the game goes, right? So you decide what type of trader you want to be, right? Or you could play both. You could play both. If you understand how the Fibonacci sequence works, you could play it both ways if you want to. Okay, when it gets to that point, buy to a high price. Maybe you say, I'm only going to buy to the 382. Okay, I take it off that 127 to the 382. I just made me close to 100 pips. I'll get out. And if it continues to push higher, then if I think it's going to short, then I'll short it at the high price. Okay. Doesn't have to be hard. Doesn't have to be hard. The key is just being patient. So right now, we pushed past that B boundary, broke it, and we stalled out around this 118, 127. You do have past resistance becoming future support at this level, right? So we'll see what's going to happen. We got to stochastic this back in the sell zone, but we're in the Asian session. Let's see how it plays. Let's see how it plays out. But if you're an 80-20 trader, that's an ideal setup to think that this may get long, right? You're playing your risk accordingly, and whichever way it goes, right? You live with the results. Okay. So that's the GJ in a nutshell. Any questions on that GJ? Ken said he's short. All right, Ken. That's cool, man. Right? That's cool. That's where it's been. Right? The thing that gets me with that pound though, is they just came out, right? They just came out pretty hawkish. Right before this all went down, they were overall pretty hawkish about the pound. Okay. Going forward, right? As far as their tapering process and things like that, and some of the things, but then all of a sudden, what they have right now going on, that's a supply issue. That's a supply chain issue where you've got people around the corner waiting for gas and things like that. They've got some supply chain issues over there, right? And so, and then there's some other concerns too, but they were just talking hawkish. So that's what has me interested to see what happens going forward with the pound, especially after this week with the sell-off that they had. So we'll see. But technically, right, this is where we are. We're in an 80-20 scenario. We may get a deeper retracement. We'll see. Okay. We know 20% of the time it will head to that D extension, 1.618 D extension, without making the list of 382 retracement. All right. Any questions? Nope. All right. So I know somebody else, a couple people put the GJ, then they had the Euro USD. Let me see. Silver, dollar Swiss. Okay. Kiki, got a hand raised.
Hi, Benny. How do you identify the FIB numbers, the negative numbers, and then the other positive numbers? Oh, you have to zoom.
Yeah, you gotta zoom out. Yeah, we'll zoom in. I mean, there you go.
Okay. Okay.
You trying to write it down?
Yeah.
Here. Just move that. I have to fix that later.
Kiki, are you using Smart Trader or TradingView?
I think it's Smart Trader.
Oh, it's doing it for you then.
Okay. I'm actually still watching the videos. I haven't reached the FIB section, so I don't really understand the FIBs that well. I'm on the current line, section 4. So,
Oh, okay.
yeah, I'm yet to go there after this video.
Got it. Got it. Got it. Awesome.
Thank you.
You're welcome. All right. So let's take a look at the euro dollar. see where we are with that. And we'll look at this from a daily time frame. And look at that, right? So we have marked out. Woo, that dollar got strong. We had marked out. This is a potential double bottom, right? We're saying, hey, if it holds, right, starts to push up, forms a low, right? Then we'll look to get back bullish on that because the stochastic is in the buy zone. But look, this is why swing highs and swing lows are important to establish support and resistance levels. Okay, so when you got down to this point, see how you have a swing low here? You never got it there. It continued down. That's why it's so important, everybody, right? To pay attention to that, to form those true levels of support and resistance. Okay, so we're pushing down. We had a huge bearish candle that broke through. And now typically what will happen a lot of times is that after a huge impulsive move like that, that candle was, that one candle from prior day was almost 100 pips, okay? And that's a pretty good move for the Euro USD. Look at that ATR, 47.6, okay? 10 days above the ATR, 10 days below the ATR, 20 days on average, okay? So a lot of times when you get a huge bearish candlestick like that, price likes to come back and at least retest, right? At least retest 50% of it at least, okay? And we got a stochastic in the buy zone. So that was a nice impulsive move to the downside. That's cool. We trade accordingly. So if you come down to the one, right, and you're tracking that business, look at what happened, right? That was that 80-20 play that we played some time ago. It got you right to a high price. Isn't that beautiful? You got structure right here. Past support becomes future resistance, right? If you didn't have any fibs on there at all, right? We should all know how to recognize that, right? All know how to recognize past support becoming future resistance and vice versa. 80-20 play to the 61.8 level. That's 2 TPs, right? So that's almost 60 pips. And then you got the drop. So it just continued with the trend. So that drop to the D extension from that 61.8 was about 130 pips. That's beautiful. And then it came down. So impulsive, right? That's that one candle. So impulsive that you got a break, right? You got a nice break of that monthly support level. So what's going to happen here soon, right? It should have happened already. I don't know what's been going on with the fibs lately. I think I need to reset my cookies or something, but you should have a new fib, right? That's the swing low that formed after the D extension. A new fib should show up here sooner or later like that. Okay, new AB boundary. And then you're looking at a B to C play. If you're saying, hey, dollar strong, Euro's been fairly strong too, but that dollar strength is crazy. So you got the dollar acting as a safe haven, and you got the bond yields went through the roof. So new highs on it. I think the dollar broke the yearly high. So we'll take a look at here in a second. But you got a potential reversal play on that, right? So if you look at the 15 here, like so, okay, on your 15-minute time frame, you got a D extension that got hit, right? D extension that got hit, low forming, and you got the potential for a reversal there. All right, so we'll see how that goes. So sooner or later, you should have a new AB boundary. Should be up now, but we'll see. But technically, like I said, that's here. C becomes a new A, our D becomes our new B, like that. So potential reversal there, but we do have a stochastic, right? That's back in the sell zone. It's back in the sell zone, but it's pushing straight up. It's at 97%. All right. So we'll see. Let's take a look at real quick before we go further. I'm going to show you guys the DXY to show you how explosive the dollar has been. All right. The dollar has been ridiculously explosive, right? So if we go to, that's the daily, right? Look at that move there. Almost a 50% pullback. But if we go to the 4, where we've been tracking that fib, look at that, A, B, C, D, right? Shot straight through that D extension at the 1.18. Okay? Shot straight through that D extension. So we're overextended right now. And we're up against a weekly resistance point. So you have to start thinking in terms of if this dollar starts to pull back and make that correction, right? Because it doesn't go straight up forever. If it starts to make that correction, all right, and push down, then you're going to see that Euro USD potentially move up. You guys see how that flows? Drop me a 2 in the chat if you guys get that. How that correlates. Right? Awesome. So you may get that retracement on that euro dollar if right now you start to get, right, that this US dollar start to correct itself. All right. So that's how you look at it from that technical perspective. You look at it from a daily, right? It's definitely overbought right now. Okay. So maybe we're due for that slight correction. If we look at I have it up. That's the D10. That's the euro. See that euro's no joke either. And here is the 10-year bond yield, right? And then you look at the UK, boom, right? Straight down. You see the difference in that, okay? See the difference in that? So when you look at the bonds, right, the demand for bonds of a particular currency is going to draw the demand for that currency. In order to buy that bond, right, from that government, you have to switch it to that currency. You have to switch, right? You have to make the exchange to that currency, all right? So it's a lot bigger than going to the airport and exchanging money, right? Which is what we hear a lot of times as the example. It's bigger than that from a macro level. So this is where we are, right? So this is boom. This has been raging, right? Look at where it hovered, right? So if we go let's look at it from the monthly. Right. So you can see where the bonds have been, right? When that demand was down for the dollar and the dollar was in the tank for the longest time. Look at that, right? And now you're getting that U-turn. Okay. So we may see some relief. Okay. And these are just things to just keep an eye on, right? Things that can kind of signal you, right? That confirmation, right, of what you're seeing technically on your charts. Okay, so bond prices are important. Bond prices are definitely important. DE10. Okay, so that's just something to keep in mind as we look for the price action and start to look for the reversals on some of these pairs. So that's where, just to go back to Euro USD, I kind of jumped all over the place, but wanted to get that covered. I hope everybody follows along with that. So
question came in, bro.
Yeah, what's up?
From Vincent. So judging from the increase in bond purchases, we are in a risk-off environment.
Yeah, we're risk off right now. Yeah, risk off right now. Got some concerns about global growth. People had some issues earlier, which started a lot of things triggering. Is that Evergrande, that huge company out of China, was almost they were looking to default on the payment. I think they made the payment though, but that kind of rattled the economy because everybody speculated and looked for signs, right? Is the economy expanding? Is it growing? If I'm investing in riskier assets, right? Is it too risky, right? Is it too volatile? Is the environment too volatile for me to keep my money in risky assets? So anytime you get some things going on around the world like that, supply issues, it can push you into a risk-off environment. Plus, because of also some of the economic data, and based on, you had all the Fed chairs, right, from the countries, they all have different titles, but they all were pretty much leaning, they followed the US and leaning towards like, hey, we're going to start our tapering processes sooner. That means that there's going to be a pullback on the cheap money, right, that investors like to use and put in the stock market, right? So they're tightening their belt a little bit. So that's why you're seeing the surge in U.S. bonds and things like that. So it's just the ebbs and flows. So now they're saying, hey, they're betting on Chairman Powell, right, starting a tapering process in November and looking at an interest rate hike in next year instead of 2023. So they're pricing that in now. They don't play. That's big money. So they're starting to price in some things now. So yep, good observation on that, man. So we got to de-extension that guy here. All right, but at the end of the day, when in doubt, just look at your technicals. So we got a D extension hit on the Euro USD. So we do at some point expect some sort of a pullback. So we'll see. All right. What else do we have to take a look at? Okay, next, dollar Swiss. So let's take a look at the dollar Swiss real quick. That'd be a good one to look at because we didn't get to look at some of the dollar pairs last night. Well, right? We got a new AV boundary. Stochastics in the buy zone, though, right? Things trying to level out, right? From that dollar explosiveness. So we got a stochastic in the buy zone, right? B to C move, 80-20 play, right? Typical down move, right? If it decides to retrace, like I said, keep in mind the stochastics in the buy zone, it may just push sideways for a while because Swiss is a safe haven. And there we go, right? But the dollar's been the bull. It's been the bull. It's been the strongest out of the two, which is why we have the upward movement. So just like that, there's your dollar Swiss. So we know the deal, right? We know what to look for. Either it retraces now, okay? It retraces now, right? So you get your retracement look like this immediately. Okay. Or, right, it pushes up, okay? Pushes up off the shallow to this area. And this is what I'm saying, right? If you're looking to say, hey, I want to risk more, then you're going to have to get, you know, a little bit more discretionary in regards to the type of setups that you're going to take, right? It's all there, okay? But you're going to have to get, right, use greater discretion. You can't just be entering everything at 2.5%. Okay, you got to be more selective. So, and then if you're a bull on that, and you're looking to say, hey, I'm looking to take some higher risk, then you would do the same thing. Except for if I'm a bull, then I got to get it down to my sweet spot, right? I get me a nice ABCD wave here into my sweet spot. Then I go down to the 15, okay? I'll take it down to the 15-minute chart. And I'm just doing the same thing, but I'm looking to get long in the key zone. Does everybody see that? How easy this could be, right? Okay. So if I'm bullish, I'm like, oh, dollar strength. I'm a bull, right? Keep in mind, right? If your bond prices start to decrease a little bit, your DXY hit a D extension and is overextended, right? If it starts to pull back a little bit, your dollar Swiss, I mean, your dollar is the base currency in this pair, so that could drive the retracement, right? Okay, so this is how you pull all that together. So if I'm just a bull overall and I want to wait for a deeper retracement to try to get long on the dollar versus the Swiss. Then once you get to your sweet spot, you're doing the same thing. You're looking for that low price around your 61.8, your 786 level. You're looking for, right, on your 15-minute, you're looking for a trend line break, okay? All right, we hold no secrets. We'll tell you exactly what it is. You're looking for a trend line break, but then down in that 15-minute, you're going to say, okay, 25, 30 pips, whatever it is that you're doing. We use the example of 25 pips. I got to put my stop like that on the 15, right? Put my stop on the 15, and then I'm looking for my confirmation to get long on that at that point. All right, to get long, okay? So even if you drop down to the 15, you still, if you get to this point or this point here where you want to short the 127, if your plan is off the 15, you still want to take that peak at the higher time frame, your 1 hour. Go back to the 1 hour and say, is my stochastic or whatever I'm using for a confirmation, right? Is my stochastic in the right zone? Do I have good alignment, right? Do I have a stochastic in the sell zone, right? In this case, for the 80-20 short, do I have a stochastic in the sell zone on the 1? Do I have good alignment with my stochastic on the 15? Okay, because then if you're taking that 80-20 short, then you're moving your stop here. And then you're playing the counter trend line break that way, okay? So then you're looking like this on your 15-minute chart. Once price gets to that level, okay? So you guys exactly how to play this, all right? Once price gets to this level, okay, then you can draw, right? Take this out. You could draw your trend line to the upside like this or whatever it's going to be at that point in time. And you can say, all right, when I get that break, I'm looking for my risk to reward. I'm looking for that trend line break or my moving average cross or whatever you're using, right? Waiting for price to break my moving average. And then I'm looking to short, but I'm gonna keep that stop there to the downside, okay? All right. Okay, that's being super active on the charts. You got to see it, right? So whether you're setting your alarms or whatever your game plan is going to be, whatever your trade plan says, if you're looking for that type of setup, then you just got to make sure that you're able to get an alert when that opportunity presents itself, right? And so, like we were saying last night, you might say that if price makes this U-turn now, I'm not taking it. But if I'm long, if I have a long bias, if it U-turns from this B now and pushes D, then I will look to get long on it, right, at the right level, okay? Then I can look to get long on it at the right level once it gets into my sweet spot, right? Past resistance, becoming future support, potentially, okay? And if I get all the alignment, then I look to get in, okay? That's how you play it. Same thing over and over again. The key is being in the arena to find a U-turn. All right. Any questions on that dollar Swiss? No? All right.
Clean, bro.
All righty. All right. Good enough. Good enough. Good enough. On to the next pair. Dollar Swissy. We got silver from D. D, give me a second because we're in the dollar section, so I'm gonna go over there. I missed that Euro GBP. I'll go back. I'll go over the dollar yen, and then we'll start going into some of those other the silvers and the golds and Bitcoin and stuff like that. So let's take a look at this Euro UJ. All right, and we're just climbing, right? I redid this chart earlier because it busted up out of that triangle pattern, and we're pushing right now up against 112. Okay, we're looking at 112 zone here, so we're pushing bullish. So if I just bring that, look at your daily, right? Look at that, like that. We're overbought at 100% on the dollar. The dollar has been raging, okay, and we're right at a daily D extension, right? If you take it off that low, okay, right? If you take it off this low here, you're in extension. Pretty much, even if you took this off and you looked at price action, you take the fib off, I'm at a key zone, okay? Look, see this here? The key level, we're the key level. So if you take that down to the 1 hour and you just track it, right? It's gonna make ABCD waves all the way up, right? I hope everybody's starting to really, really see that concept and get tied into that, right? Is we know that the market moves up, down, and sideways. If it moves up, it's simple, it's gonna move in waves. If it moves down, it's gonna move in waves, right? Some shorter waves, some larger waves, but it's gonna move in waves. Okay, that's why we use the fibs. All right, so here, look, you just got an ABCD move right off the trend line in confluence with a 50% pullback. And right now it's kind of just hovering, right? So maybe we retest this zone here, see if it holds, right? So you got this level right here, like that. See that? Past resistance, becoming future support, potentially, okay? And then see if we can get that push to the D. All right, see if we can get that push to the D. So what I'm waiting on is for that to finish out. If we can get that to finish out, and then we know just structurally, if we zoom out, what we're looking at, right, across the board. Well, I'm on one, it'll take all day to see that, but from the daily, you can see where we're at, right? You can see where we're at. Just messed it up, but see. We can see across the board that we are at a key level at 112. And we're way overbought. And you see the DXY overextended at a D extension. And you see that the bond yields went through the roof. All right. So you start to put the pieces together and you can say, at some point, we're going to be due for some relief and a potential correction. All right. So this is how you kind of pull all those things together and kind of start to put the pieces of the puzzle together and build a case. So that's the dollar yen. Any questions on the UJ?
I have a question.
Yep.
Do you expect price to respect that key level and then start to downtrend? Is that what we just are saying now?
Right here, this key level up here.
Yes.
Yes. Yep.
Okay.
That's where you get. That's where I would like to see the U-turn. So you can see here where just from right. This is where we always talk about like relevant support and resistance, because then you can look back off of that. Right. Price always tells the story. Right. So just not even looking back, we saw that, hey, here's a potential key area. If you zoom out, look, see. So price finally broke through that level. Finally, like here was the previous level right here. It finally smashed through it. We may come back to retest it. If it holds, right? If it holds, then we look for a push up into that zone. Okay, because that's what it's trying to do now. It's trying to, you got resistance here that they're formed on a one. That's a swing high. Boom. That's obvious right there. 112.04. Okay, so you got a resistance there that's formed on the one like that. That formed a resistance level. Okay, swing high. Two candles to the left, two candles to the right of that high. That's center wick high. Just like that. Just that easy. So we'll look to see what happens at a test of this zone and this level, and then see if it'll push back up into that zone. That's where I would like to see that reversal occur, is right here. That would be my optimal point to look to see where price reverses. So even if you took your fibs off, okay, it just so happens that the fib is a great measuring tool, right? So it comes, that 1.618 comes in confluence with that exact zone, okay? So if you took these off and you just looked at it from a price action perspective, it's like, yeah, I want to see it get back up into the zone. If it gets in that zone, then we look to see the reaction, see if it starts to make the move down. And that could be a major play. That could be a major play. So we shall see. We shall see. But the dollar has been, it's been a crazy year. It's been a crazy year for the dollar. Any questions on the UJ? Yep, good question, my man.
No, I was just saying thank you.
Oh, you're welcome. You're welcome. Anytime. Anytime. All right. So let's take a look at silver. And it's been a minute. It's been a minute. It's been a minute. Oh. Well. It's still following the flow that I had marked up from the last time, right? Look at that. Woo. Pull back, push down, right? Look at that. Man, look at that, guys. A, B, C, on the way potentially to the D, right? On the way potentially to the D. Look at that. It's amazing. That's amazing, right? 61.8, right? 1.618 the extension. But this fib, we zoom in on this fib here. We know what we got the potential for, right? The 80-20, right? 382, 61.8, TP3, right? So let's mark it up. Like Benny, don't just point it out, mark it up, right? Here, look, 382, 61.8, TP3, that's a daily level right there. So we'll put that right before that level, like that. Boom, okay. All right, just like that. So you're looking at, hey, what is it gonna do? Same as always, right? Same as always, right? We get that drive up off that B boundary, potentially, like so. Or we look for a classic push down, right? Maybe a short pullback, push down, right? And back up, right? And then we know in extreme situations, right? You get that push, you get a drop in the silver prices, you get that push straight down to the D. Sometimes that happens. If it does, then you just wait for a new AV boundary to form. Same game all over again. If you're saying, hey, I read my trading economics, right? I'm looking at that demand for silver, the silver versus that US dollar, that dollar's been a bull. I think I want to just wait for my high price and get short again, right? get short again on that, then just wait for the high price. Then your hands off of this until you get the high price. Get the high price, you short back down to that D extension, and then there's your capital D extension there, right? So these are sub fibs that we're running. These are sub fibs. Okay, it's been a long move to the downside, but isn't it amazing how that works, right? The ABCDs of the game, how you could see the entire picture and not get caught up in a candle here or a candle there, right? Save yourself some stress. There it is. Okay, so that's where we are. Any questions on silver? That's the markup right now. Where we at? You're in the sell zone, so you're on the wait, right? It might not reverse right away. You're moving sideways. You're in the sell zone. So maybe you get that push down to the 127. But if you're using trade rules and you say, I need things to align before I take my trade, then you may want to wait on that. You may want to wait on that. Okay. That's it on silver. It's been a beautiful move to the downside. Anybody currently in on that short? Been short for a while. We covered silver a long time ago. I know we don't visit it every day. Nobody. No. Treva, you're welcome. Didn't hear that. Sorry.
I was saying I did enter silver, but then I had a wrong analysis and I blew my account.
You blew your account?
Yes.
All right. That's all right. We've all been there. We've all been there. Well, that's why you're in the family. We've been there. So it's all good. It's all good. What you do is you journal that, right? Ryan talks about it all the time. How did that make you feel? You said, hey, I did a wrong analysis, figure out what you could do better, and you keep it moving, right?
I didn't even know about the fibs. I just did it based on the candlestick trading Bible, and I blew my account. So it wasn't from here. It was from me, actually. And I felt so bad. That's why I got in here to learn.
Gotcha. It's all good, right? But hey, we know better risk management now, right? We know all about that. So whether it's the candlestick Bible or the inner circle, or none of it'll work if we don't use proper risk management. So we live and we learn. We've all been there. So welcome to the family. Welcome to the family.
Thank you.
You're welcome. You're very welcome. So that's the silver play. And we had gold. So we take a look at gold. So we look at the XAU USD. And I didn't even look at this today. This is going to be interesting. Oh, well, we could continue to the downside, right? So we've got an ABCD move. We broke that level. We got a sub D extension. So we did look at this earlier this week. So we got a sub D extension that got hit on that. So that played out. So it should be getting a new sub fit there. But we'll just work it off the capital fib because we had that long-term target, right? Off of this counter trend line break, look, A, B, C, the D extension off this capital fib. So let's just delete this, keep it clean. Look at the overall move for right now. Here's our pullback to the 61.8. Short, broke that support level, that support zone. Right now we're at this 118, 127 zone, but ultimately the D extension is here, which is in confluence with a daily 1.618 to the downside. So let's look at that from the daily chart here. So here's this move to the downside overall, where we track that trend line break. And here, look at that. It just repeats itself. We remember this double bottom here where gold took off, right? Right up against the trend line, push right back down. Okay, so you just follow in the market. You got all types of stuff here. Double bottom, you pushed up against the downtrend line, it reacted, it moved sideways, it failed to break out completely. You got a double 1, 2, 3 triple top, and then it drops. So all types of good price action lessons here. And then you could be finishing out at the D extension in this zone. That's that 1.618 that you saw on the 1 hour. So if we get price to finish out there, then you're right back in that zone for potential double bottom, depending on where it wants to form as low. So that's some beautiful price action, right? So looks like madness, but there's some good things that you can learn from this pair, especially off this daily look. So look, A, B, C right at a 61.8, and we got the drop. So we may be looking at a potential pullback now to retest structure, right? That it just broke through. But ultimately, right, if it's going to follow its projection, then you're going to come right back down here to about 1701. So that's where we are right now in gold. This one's off and running. So if we ran these sub fibs to the downside like we had, you got to sub the extension that got hit. You got to stochastic this back in the sell zone. But once you get a new fib, if it gives you a nice pullback again to that structure, then maybe it'll give you an opportunity to get short to this zone here.
Hey, Benny, this is Danny. How you
What's
doing
up, Danny?
tonight?
I'm good,
Hey,
man.
hey, Ryan, how's it going? Listen, I have a question. This is based on something you just said that I'm trying to take all of this in, and I've never gotten to the point now, but I think I can kind of. You just said capital fib versus a sub fibs. How do you constitute the difference between the two? What makes the difference between a capital and a sub?
Yep, because this is so when you look at where you took this from the high, okay, this is your main fib to the downside. So you see from my high target here off this week,
Yeah.
and you got ABCDs. This is that current fib on this down impulsive move, right?
Right.
But we know that when price retraces, it's going to do it on ABCD waves. So this is the overall Fibonacci sequence here. So that's why we call that the capital fib, because that's still active, right?
Okay.
You see that we haven't hit the respective D extension yet on this fib. So this is our capital fib. But because of, right, this distance between B to C, if we would have ran this up here on that retracement, those are sub fibs, right? Those are what we call sub fibs because it's within this overall major move, right? And then this move, the C to D push, right? So the C to D push, so out of our sell zone into our down C to D push zone, okay? It's gonna move in waves. So these are your sub fibs, the smaller waves that are taking you to that capital fib target. You see what I'm saying?
Mm-hmm.
Just smaller waves. So there are plays off of that, right? If you wanted to take that, right? You could take them off of here, or you could say, okay, this is my push zone leg. You can even take that down to the 15, like so. You could say, all right, well, here's my 61.8. I'm looking for a reversal, but I don't want to play it here. I want to play it on the 15. Then you just, each time frame, the lower you go, the smaller the wave, right? So I could go in here to this wave and look, here was that 61.8 target there. If I ran my fibs there, it's just smaller waves that I'm playing, right? Smaller intraday waves. Look, A, B, C, D, right? You see that?
Mm-hmm. Yes.
So look, A, B, C, D. So on my 15, if I'm on a 15-minute chart, this is my 1 hour C to D leg. But look, you see this fib here? On my 15, it just gets smaller and smaller. Each time frame is just a smaller representation of the other one. It's just a fractal of the other one, right? So it's like that. What we use that example all the time about the tree, right? You got the trunk, then you got the branch. That's just a smaller replica of the trunk. Then you got the twig. That's a smaller replica of the branch, right? When you zoom in on that, it's like pretty much identical. So
micro.
Absolutely, absolutely. Great way of putting it. So look, here on my 15, this is my capital, right? But then look, if I put this here like that, boom, right? Sub fibs. It's just smaller and smaller the waves. And then how you play those just depends on the type of trader you are. If you're an intraday trader that likes going from the 15 to the 5, you can do that, right? But the key is realizing, that's what's so amazing about the fib sequence, is that no matter what the time frame, it's going to move in waves. Don't matter, it could be the 1 minute chart. It's going to move in waves, right? Go to a 1 minute, right? It's going to move in waves. I go to a 1 minute to this low, that's going to move in waves, buddy. You better believe it, right? That's on a 1 minute chart. It's going to do it.
Okay.
Yep.
Very good. Thank you. Thank you.
Oh, you're welcome. You're welcome. Great question. Great question. Any other questions on this gold play? So we're kind of like in between right now. We're in between on that right now, right? Pulling back, but it's made a beautiful move to the downside. Beautiful move. No matter what the asset class, it's going to make waves. All right. Okay. So we could get back to this level, right? I know a lot of people are eyeing that up. That's the last place you got a major reaction at this level. Major reaction at that level. So we'll see. We'll see what happens. Got some good confluence there. All right. Okay. So let's go some of these other pairs that we had. XAU, Bitcoin. Let's take a look at Bitcoin. BTC, USD. Save the changes there. And we look at that daily, right? We've just been short. We got a little sideways movement now, right? But we have been a bear, right? On Bitcoin, and we're kind of getting a little rangy now, right? Last candle from the day pushed up. So let's see if we can track that one on one. Okay. So it's simple. Right. So we're still overall bearish, but it's just giving you a reflection of what you saw on a daily, right? That's what you saw on a daily, was just a lot of sideways action. So if it continues to push up, right, to this level, if you get a press up against that trend line, let's see how it reacts on that. So no play on it, right? Now you do have some traders that'll say, look, right, again, just depends on your style, okay? If you're trading in the candles, right, which some of us, that might be what we're used to, right, overall, not seeing the big picture. You say, hey, all right, I got support here, okay, like this. Okay, I got a support zone there where that's support. So if I'm playing off my 5 or my 15 minute or like that, see, look, boom, 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 right? So you might be long on that. Okay, it all depends, right? I'm seeing the big picture overall that I'm in a down AB boundary. I got to pull back to a 382. We may get a further push up, but we seem to be a little range bound, right? There's that daily level, right? That price broke through, tested it as resistance. Was support, tested it as resistance, and it's just bouncing. So maybe we get a push back up, right? Maybe this trend line gets snapped and we get it pushed back up to 45,000. Everybody see that, right? Once you break it down, right? So if we just look at this now in the range, right? And I take this off and I come across it like that, okay? So maybe we're looking to get a little bit range bound back to 45 since we got a strong reaction off that 45 last time, okay? So if I come down to my 15 like this, okay? Back here, okay? You got a fib that's way overextended. I need a new AB boundary on that, right? So if I leave this on here, or where we at? Pause up, 1, 2, right? So that's technically like this. That's what eventually is going to show, okay? So maybe I get, if I didn't get this move off of support, maybe I get a pullback, and if I'm thinking back bullish, right, then maybe I'm looking at something like this on Bitcoin, right? And a push back up to the top of at 45. All right, that's the best scenario. Just looking at that price action. I'm glad somebody asked about this because it is ranging a bit. But look at that. At 40,000, the buyers come out to play. It keeps hitting this 40,000 level. Right around here, what was that? 40,817. What was the stuff? Is fascinating to me. You can just see the footprints being left. So if I come here, this low, that low was 40,800. 40,804. This seemed to be the sweet spot. I need to be paying more attention to this. What's that? 40,916. And then it's taken off, right? So we have to remember that for the next time if it ever comes back down there again. Right. But if it's gonna play between 40 and 45, you're looking at a range play, right? So now that this is taking off and giving you the strong reaction, right? So obviously, right, we didn't catch it. Somebody might have, right? In the group. If you did, let us know. We want to give you the shout out. That's not the lower low. So like this. So you got that break off here like so. Okay. That good 1, 2, 3 price action. Now if you get a pullback, right? Then you look to play that, right? You get a pullback to your sweet spot, you look to play that. That's where we are on Bitcoin, waiting for a pullback if you didn't already catch this impulsive move to the upside. That was nice. Any questions on Bitcoin?
No, sir.
We'll play this from the that's on the daily. Hold on 1 second. That's the 1 hour. I still want to be able to identify that trend line like that. Should have just like this. So just so I know where that trend line is. Like that from the 1. All right, that's where we are. Right. So 1, 2, 3, 4 touches around that 40,800 area, between 40,800 and 900. That's where we are on Bitcoin. All right. What was the have a good night, Benit. Absolutely, you're welcome. Oh, Euro GBP. So let's take a look at that, right? Because we looked at that last night. See what type of action we got on that. Now, oh, look at that. So point out that new AB boundary is kind of taking its time, but that's the Euro GBP, all 42.4 pips of it in regards to the ATR. But that's where we are right now. So still looking at the potential, right, for that 80-20 move back down to the 382. If it does that, we got about 32 pips to go, 60 pips to the 61.8. That's where we are. So a little relief, right? And then we'll look if it gets down to that low price, then we have to look at it and see what the conditions are looking like. Euro's still strong, pound's still weak. To look for an opportunity to potentially take that back long. So we will see. That's the Euro GBP. Any other questions on that? That's a pretty quick one because it moves slow, and we got a new AB boundary. That's just a hot mess all day. So. Okay, we'll let the price action do what it wants to do. Any questions on the Euro GBP?
Is that a potential 80-20?
Oh yeah, oh yeah. Yep. This is your 80-20, right? That retracement. We know the market likes to find that C, but the Euro GBP moves slow, so it just will take its time. It'll take its time. If it wants to push down, it's gonna take its time and do it. This is a strong daily level here, though, right? That we brought down from the daily time frame. Okay, past resistance becoming future support at that level. So we want to see it come back down and see how it reacts, right? But if you're in a straight short, I mean, it's moving in that downward direction. Okay, that's it. Any other pairs that we want to take a look at before we jump off? This Euro JPY. I'm gonna go through and look at some of the pounds real quick, just to. Because I know they all were in similar situations. Look at that. Ryan, didn't you call this one? You went over this setup.
Yes, sir.
Yeah. Nice call, man. Nice call. Nice call on that. That's beautiful. Now it's just decide what it wants to do. Right? They're both strong. One's a safe haven, right? We're in risk off, and one's the Euro that's been pretty strong. So let's go and look at some of these pound spots. We looked at the dollar a little bit earlier. It's trying to make that U-turn. The dollar's been so strong. Didn't catch that D yet, right? But it's just kind of trucking along. We don't have a 382 yet on that. We'll see. See how that goes, right? Pay attention to that one. See if it can hang in there and not hit that D extension, right? We looked at the GJ, the pound cat. Take a look at that one. Still just moving sideways, right? In that 80-20 zone. Don't have a 382 yet. Yeah, so we'll see. Pound Swissy. Same thing, just kind of trucking along, right? It's pushing up a little bit though. It's pushing up a little bit. So we'll see. Just being patient, being patient. All right. All right. So that is pound New Zealand. Take a look at that. See where we are. Ooh, that's a nice swing there. It's a nice swing. Let's look at the daily. It's that 382 move that we were talking about. Pay attention to this one to see if it's a pound versus the New Zealand. New Zealand's been pulling back. We'll put a trend line on that one. I want to see what that looks like going forward. See if that can break. I watch that one closely. That's right at the 60 when they consolidating. Pay attention to that. And maybe get short. TP level there. And then a TP level here. It's going to be an interesting one. All right. Any other pairs before we close it out tonight?
I do have one question.
Sure.
On the Euro British pound.
Okay.
Your AB, I didn't quite understand. I know the smart trader creates that the beginning of the AB for you.
Yep.
I didn't understand why it didn't choose the higher candle where you had the what appears to be a higher high. Yep, right there.
Here. Because it's swing lows and swing highs, right? So the way you form your AB boundary, great question. You got a swing low, it's gonna take it to the first swing high. That's what's gonna create your AB boundary there. Swing low, 2 candles to the left, 2 candles to the right. That's higher than the center wick low. And then your first swing high, 2 candles to the left, 2 candles to the right. That's lower than the center wick high. Right?
I got it. Okay.
Got it? Right?
Yes.
Because think about it. Price action moves from left to right. That what you just saw, that higher high, didn't exist yet.
Makes sense.
Yep, you see it? There you go. It's a great question, man. Right? People get confused on it all the time, especially in the beginning. Right? So if I'm moving from left to right with the price action, I got the impulse move up and I got to high that form. I have to draw my fib there. If I was doing that manually, I've got to be like, boom, there's my low, there's my high. And then I deal with the price action as it occurs after that. Yep.
Okay. So you're always taking what the market gives you.
That's it. That's it. That's it.
Thank you.
Yep. You're welcome. Right. So even if you go back in time and let's see. Yeah, I'm messing my lines up, but that's all right. If you came to this level here, right, where price reversed, that first fib is going to come from the low to the first swing high, right? So look, oops, hold on. See that? Boom,
I see it. Yes, I see
boom.
it.
Right?
So it's always the next swing high or swing low that it's going to draw that fib to.
Correct. So once your D extension is hit, it's not going to say, oh, a D extension was hit. Let's put it here. It's going to say, I need a swing high to form. So wherever that next swing high forms, it's going to mark it.
Okay.
Right? Because if you were on this fib here, technically your D extension was right here. Right? But look how price ran past it. It didn't form a high until here. So it's not going to give you a fib, right? It's not going to give you a fib here just because the D extension was hit. It has to form a high. That's how the sequence plays out, right?
Okay. Thank you. Now I get it.
Yep, you're welcome. You're welcome. So in essence, that next resistance level, right? After the D extension is hit, because it's the swing lows and swing highs that form resistance.
Okay. See, I'm still drawing mine by hand over in TradingView, so that's why this is really important. So I understand what comes up from Smart Trader.
Yep, that's cool. That's cool. Ryan, in one of our videos, was it our videos or one that we have, or one of the sessions where you did it by hand in TradingView?
In the Fib series of videos, I did a session where I marked them out by hand in TradingView.
Okay. Yeah, I'm still going through all of those, and some I go through more than once and just take notes and make sure I get it.
Yep, that's cool. So, wherever you get that trend line break, right? That's why trend line breaks and things like that are important. You get that reversal, you can go from that low before the trend line break and that high afterwards, pull your fib, and then you'll be off and running in the other direction.
Okay, cool. Thank you.
Yep, you're welcome. You're welcome. Look at that double top there back in the day. Right? So no matter where you drop them, look at that. It's going to give it to you. Right? So you come to the next high, like so, and bang. Look, A, B, C, D, A, B, C, D. No retracement there. Impulse move straight down. Right? There you go. All right. So we're going to wrap this up. Ryan, anything to add before we close out tonight?
Ryan, how about US 30?
US 30, Smart Trader doesn't carry US 30 on the chart. It doesn't carry your indices like that. Your Forex, your indices that's available on the Forex market. Your E-minis, it doesn't carry that. You're gonna have that on TradingView. So we could do a session where we go to TradingView and we can mark up your US 30. We can work on that. But we'll have to switch over to TradingView.
Okay.
Yeah. So we'll have to hop over to TradingView and mark up your US 30 and those E-minis and things like that. They don't have those on Smart Trader yet. I know they're trying to push Mr. Martinez to do it, but he's very big on working in the best interest of new traders. And a lot of times people completely get smoked on the E-minis. And so he trains a lot of new people. And so he thinks it's a little bit too volatile, but they're trying to push him to get it on Smart Trader. But we can go over to TradingView though and take a look out. All right. So that is it. That is it. So let's make sure, right? We get some rest, get back on these charts with my awesome partner, Mr. Ryan Cargis, tomorrow at 7 a.m. And we'll be going back at it again, everybody. So thank you so much. And everybody have a great night.